Well, I think what we're seeing is that global investors are becoming a little less focused.
Remember, at this point of time, H124, order inflows for BHEL has been 33,000 crore.
They say yes, in the last 6 months, Dalmia has underperformed both the Nifty as well as other cement stocks. But valuation-wise, they say it's trading at less than 10 times on EV upon EBITDA basis, and they believe there's scope for it to re-rate. Unlike what the GIFT Nifty was suggesting, the Nifty is now opened up with just a 5-point cut, I think.
But if you buy 30, 35, 40 companies, you cover every angle that you can, and then you gain some and you lose some.
The newer businesses like Chetak did well.
So definitely it's a setback to the global trade, which in any case was facing a lot of geopolitical challenges.
We intend to produce molasses out of sea heavy route to the extent of 3.5 crores litre.
Flat on the Nifty at the Sensex, day one of 2024.
But 2023 overall has been the best year ever for the company.
As far as the fares of Amrit Bharat Express are concerned, they're expected to be 15 to 17% higher.
For the markets, if we take a look at the Nifty, it is higher by 20 points.
Good afternoon and welcome to the first ever closing bell of 2024. I am here with our colleague Surabhi Upadhyay this side along with Rima Tendulkar and Nigel D'Souza. And guess what, guys? The Bulls have taken control. I guess, if nothing else, it's a very promising start because for a little while we even had 21,800 on the screen today.
No, absolutely. And look at the way the mid-caps are just taking off from where they left off on Friday. A big day of outperformance for the mid-cap index. There's nothing keeping this market down, right? Doesn't matter if the rest of the world is not trading. Indian markets start flat, but it's back to its winning ways.
Yeah, we have to comment on the market, so might as well look at that. But we're a loved off day, right? I mean, January 1st should be off. I think we need to reconsider that. But it's a good session, so to call it. With 60 minutes to go, volume's extremely low. And the broader market outperformance, that's something that's really heartening, to see. 21,800. The last time around we went there, we pulled back, close to around 100 points thereabouts. So let's see how it goes. But select themes are still doing well. I think we'll have to wait for a couple of more sessions to understand whether or not the Nifty wants to go up or wants to pause, consolidate for a little bit, and then, in fact, move up from here on as well. But I think let's get in our expert who we have at around 2:30 today. Rahul Mondar, I think, joins us on the show. Hi, Rahul. Happy New Year. Wishing you the best in 2024. We need to track the markets today, though we would have liked a holiday. But how do you see trade set up at around this 21,800?
Thank you. Wishing you and all the viewers a very happy 2024 as well. I agree. We could do with some rest for sure. But I think great start. I mean, who would not like a day where we've probably challenged the previous high, if not attempting to make a newer one. So I think the positive note also strikes chord with the sense that technically, when I look at short-term, medium-term frames, they still look very solid. There's nothing which, prompts me to take a short position right away. But at the same time, the logic of a lot of traders is that maybe the market's done a lot too quick. And, that's where the fear comes in, and that's where the negotiation comes in, where, will the market pause? Or, but I think that debate goes on. Market's not exhibiting that kind of fear at this point in time. But what should make one get a little careful is the level of 21,650 if you're looking at the Nifty spot. As long as we hold this from a slightly medium to long-term perspective, I think we'd remain in that comfort zone. So keep that level very closely on watch, I think, for the next week or two, 21,650. I think this will become like a trend decider level, a key level, which would really define if this uptrend is going to continue and, trot a little further. Having said that, there are some spaces which look very promising. And I think pharma is one of those comfort spaces. And, when I look at stocks like Divi's or Dr. Reddy's, I think there's clear sense in even buying them in the short term. If you can keep a small stop loss, a stock like Divi's Labs, I could buy it at current levels, keeping a stop below 3,900. We should be looking at about 4,030 to 4,040 levels. Dr. Reddy, for that matter, I don't think it should be any challenge for the stock to, head closer to 6,000 levels. Banking as a space looks good. So I think there's much more positive. What are areas that I would be worried about? What are stocks and levels I would be worried about? And that's what I was thinking about this morning. And I think it's the two big heavyweights. When I look at Reliance and an HDFC Bank, should for any reason 2570 breach on Reliance or 1690 breach on an HDFC, that for me will be a red flag and would probably also coincide maybe with 21650 breaching. So that's what I'm trying to prep myself for. If these important levels break down, one needs to have a plan B.
Okay, fair point. Rahul, we will keep that in mind. And we will come back to you once again for some more trades. But for the time being, I mean, it's been looking good because markets recovered very well from the opening levels. And today, it's newer sectors. Basically, IT is performing and auto is taking a bit of a backseat. So that rotation is underway. And interestingly, the bank Nifty has managed to move to the, to the green side of the screen, minus HDFC Bank once again. It's not HDFC Bank. In fact, even Axis is dragging its feet. It's the others that have chipped in a little more today, your ICICI, Kotak and the like. So that's the Nifty Bank coming in for you. SBI, BOB, ICICI Bank. But as you can see, HDFC Bank is still a bit of a drag. Speaking of drags, the other such sector is autos. Had a fantastic end into 2023. The sector rallied quite a bit, a lot of the frontline stocks. Today, it seems to be a bit of a sell-on event or sell-on news playing out as the auto sales numbers for the month of December have been coming through. We have Sudarshan joining in with the latest tally. Sudarshan, fill us in.
So December auto sales so far have come in largely below CNBC-TV18 poll, and it seems 15 days of Malmas, which is known as inauspicious period as per Hindi calendar, likely to have impacted the sales of these auto companies. We'll start with Maruti. Total sales are at 1.37 lakh units against CNBC-TV18 poll of 1.47 lakh units and against 1.39 lakh units in the same period last year, and it's down 1%. But 2023 overall has been the best year ever for Maruti. For the first time, it has crossed annual sales of 20 lakh units, and also on exports front, it did highest ever yearly sales of 2.69 lakh units. M&M has also reported sales below estimates. Auto segment sales are at 60,188 units against CNBC-TV18 poll of 67,550 units, but year on year, it's up 6%. For tractor segment, sales have come in at 19,138 units against CNBC-TV18 poll of 22,667 units, and it's down 18% year on year. Same trend was seen in Escorts Kubota sales as well. Escorts has reported total sales of 4,536 units, which is down 19% year on year. Domestic sales were down 17%, and exports are down almost 32%. For the tractor segment, even commentary was cautious. Escorts Kubota says rural sentiments were impacted due to delay in crop harvest, lower rabi sowing, thus affecting both retail and wholesales. M&M says retail momentum slowed down on account of tapering of agricultural activities, which is the norm in the month of December. Lastly, from two-wheeler segment, Bajaj Auto has reported numbers higher year on year, but it is slightly below CNBC-TV18 poll. Total sales are at 3.26 lakh units against CNBC-TV18 poll of 3.5 lakh units, but year on year, it is up 16%.
Okay, thank you very much for that. Dipan Mehta is with us on the show. Dipan, you want to comment on Maruti? Maruti, December has been muted for the company, but annual sales of 20 lakh units for 2023, exports at a record high. If you had to bet in the four-wheelers, which one would you bet on, and thoughts on Maruti from here?
Yeah, good afternoon, Rima, and thank you for having me on your show, and Happy New Year as well to you and the entire CNBC team. Well, I think a mild disappointment as far as the numbers are concerned, but the real story in Maruti is all about premiumization, and we are seeing that amongst all the auto players, they have recorded the highest average selling price in the September quarter. I think 14-15% increase year on year in the average selling price, which is quite impressive. And so although even if the volumes remain more or less flat, the company can still report in the range of 15 to 17% top line growth, which is fantastic at that base. To answer your question as specifically which two-wheeler or four-wheeler stock to buy for, I think certainly I would go for Maruti. And just waiting for some sort of a strategy as far as EVs are concerned, which they're expected to do in the next few months or so. and that will provide some more clarity. But from a valuation perspective and also the tilt towards large cap stocks and the risk return profile, I think Maruti certainly looks quite interesting.
Okay, all right. Thanks a lot for that, Deepa. And stay with us. Ekta is joining us to tell us about Fortis. That's one of the stocks that has been buzzing around in today's session. Ekta?
Well, yes, Nomura is bullish on Fortis. They have a buy call. They've raised the target price to 475. They expect improvement in the average revenue per occupied bed growth, and the expectations are over a medium term. So they expect the RPOP to increase to 5.8% versus 4% in terms of a growth over FY25, FY30 on a CAGR basis. They are factoring in factors such as a sustained improvement in the case mix, payer mix, along with price hikes. Now, a newer brownfield capacity is expected to come up over the next 4 years, which will also have a relatively high RPOP, which will basically aid the financial metrics. They also believe there are adequate levers in place to deliver a margin expansion. So they are estimating hospital margins at 20.2% in FY25, which is in line with the company's guidance of 20% versus 16.9% in FY23. Valuation-wise also, there is some upside according to them, because Fortis trades at 22.1 times 1 year forward on an EV to EBITDA basis versus the industry average of 23.5 times. March 2025 fair value range for the stock for Nomura on Fortis is 435 to 545 rupees.
Okay, all right. Thanks a lot for that, Ekta. As we speak, in fact, the stock is at the high point of the day, up close to around 6.5%. Deepan, we were wondering which company to cover because of these brokerage calls. And I was thinking of Dalmia Bharat, but I think we know your view on cement. So we'll keep that for a little later. On Fortis, what's your view?
Actually, Nigel, at some point I will have to eat my words on cement, because clearly and I can sense that you are positive on cement every time you talk. So I'm ready to eat my words.
No, Deepan, honestly, I expect some kind of corporate actions, to take place in the cement space. And I expected even before the general elections. Kesuram is what we had covered earlier, and that was a stock that ultimately got folded up. And I suspect that in the month of January, we'll see one more at least, maybe a smaller size. And when this happens, that's what creates a lot of excitement. But let's focus on Fortis for now.
No, I think very positive on hospital stocks per se. And all companies, including Fortis, have been pretty responsible in terms of adding new beds. And clearly, the existing beds and the existing hospitals have stabilized, and the return on investment over there is gradually moving up. Fortis, being an old player, has got presence in the key locations, which is a huge advantage. And then those locations and those hospitals, they are optimizing by brownfield expansion or adding more and more procedures which they can do. And they have successfully also attracted a lot of talent in terms of doctors and other medical staff. So generally positive on Fortis. But there is this particular ownership issue. It's been several years, and there was a Supreme Court judgment as well. I don't know what the outcome of that will be. But that notwithstanding, on a fundamental basis, we are positive on all hospital stocks, including Fortis. And this could be a good defense play also, because if the economy were to turn or something were to go negative, then at least healthcare is one sector where there is a certain degree of, I would say, stability in healthcare spends, which benefits these companies and reduces the volatility in their earnings.
Today, all the Gujarat state-owned companies are doing well, whether it's GMDC, GSFC, Gujarat Gas has spiked up close to about 8%, Gujarat Alkalis is up 5.5%. Deepan, any particular development? You remember a couple of months back, or maybe it was more than a year back, there was news about, how these companies should give their dividend or buyback. Has there been any development, or is this just a hope, is this just a rally ahead of, the elections?
No, Rima, I think first of all, investors are looking for value plays, and all of these companies are great value plays. And there's a fair degree of certainty that the Gujarat government will follow through on their endeavor to distribute a large part of their earnings from these companies. And that certainly should be very beneficial. Even if that doesn't materialize from a P multiple perspective, as also the fact that these are really well-run companies within the state ownership, the state PSUs. From that point of view also, I think these companies have a good future, and they can certainly provide outperformance over the next few months or so. GMDC in particular, there could be a massive upside because they're getting into rare minerals or rare earths, what they call. And if they meet success over there, then that could take the company to another level completely. So that's one stock one should watch out for on the radar.
By the way, 21,800 is here. Now just 200 points away from the next milestone of 22K. Let's pull up some stocks. ICICI Bank is helping the Nifty make this move this afternoon, as is L&T and HUL. These are the big heavyweights where, we're seeing some positive price traction in the last couple of minutes. And that's really showing up on the screen. So you can see L&T is now trying to break into positive territory. And ditto for Lever. Lever is pushing hard as well. IT anyway has been a very supportive move today. Most of the large cap IT names like TCS, etc., they've been up and about in any case. And now they're getting some help from these other big boys too. So good going for the market. Deepan, hi, good afternoon and season's greetings. Wish you a very, very happy 2024, a good positive new year. So you tell us, we're at a time where this market's working with a Goldilocks scenario, right? No one's expecting any major hiccups in the US. We're expecting rate cuts pretty much everywhere around central banks. And then you have the earnings trajectory. So the next earnings event really is going to be IT. What are your expectations here from the large cap names, and how would you position yourself on the stocks?
Yeah, good afternoon, Surabhi, and Happy New Year to you and everybody in the CNBC family.
Thank you.
See, I think the numbers are more or less discounted, and you could expect flat to slightly declining profits. But management commentary is going to be very important because it will be a few weeks since the Fed announcement that they are going to go ahead and cut interest rates, and how that is impacting tech demand and tech spend, that needs to be seen. See, on the positive side, a lot of IT companies are sitting on a good order book position. They have got many multi-year, multi-million-dollar contracts. Just that execution was slow over there and discretionary projects were put on hold. So the real question to ask all the IT managers and CEOs is that is there a change in sentiment? Has the confidence improved? Will they start spending? And that, I think, in itself is enough to create a rally in all IT shares. By and large, in large cap IT is under-owned, and I think they could provide a surprise in this earnings season.
Okay, large cap IT could do well. 2023, we had the mid cap IT stocks outperform. Maybe it's the turn for the large cap. Stay on, Dipan. Get into a break. We'll come back, continue our chat. We'll also invite Anand Shah, head of PMS and AIF Investments at ICICI Pru AMC, joining us. Welcome back. Sugar stocks are higher in trade on various news updates. Let's go across now to Sonal, who's focusing on the sector. Sonal.
Well, yes, two stocks that are on my radar today. For Dhampur Sugar, it is because the company has considered a buyback. They will have a board meet on the 3rd of January to do that. And that's why the stock is excited ahead of that buyback news. The second thing which is working for the entire sector is what we discussed on Friday, that the prices for C-heavy molasses, it has been increased by around 6.87 rupees per litre. And this has come in as a good news for the sector as well. In fact, we spoke to the management of Balrampur Chini earlier. They did indicate that it is a positive step that the government has taken now. They say they are hoping to get a price increase in B-heavy molasses as well. And they produce around 3.5 crore litres of ethanol using C-heavy molasses. So it would add around 25 crore rupees to their realizations. In terms of the sugar price right now, because there was an expectation that sugar prices would fall, it has, but they say it is around 39 rupees per kg and they expect it to remain at these levels. They also say that they were to produce 10 crore litres of ethanol based on juice. Now they will be producing around 3 crore litres only. So there, of course, is some dip in realizations that they'll be seeing. But with the price hike that they're seeing in C molasses and the expectation that the prices would be hiked in juice and B-heavy molasses as well, they are looking at better realization than what they had expected.
Thank you very much for that. Earlier today, we had a chat with the CFO of Balrampur Chini Mills, Mr. Pramod Patwari. Listen in.
Price increase for C-heavy molasses is extremely positive in our view. For a company like us, now we intend to produce molasses out of C-heavy route to the extent of 3.5 crores litre. So that would give an additional income of around 25 crores. As far as the prices for B-heavy and juice is concerned, that is still under the consideration of the government of India, and we are hopeful that shortly that will also be announced. Our ability to produce ethanol during the season is 35 crores litre, and out of that, this year, ethanol year 24, probably we would be doing only 26 crores litre because of this rationalization of sugar diversion into ethanol. Earlier, our target was around 32 to 33 crores litre out of production capacity of 35 crores litre.
Okay. Dipan, do you want to weigh in on any of the sugar stocks? And even fertilizer as a pack is doing quite well. Are we missing any news flow?
Oh, I think that sugar now is more an ethanol play, and it's getting more and more dependent on government policies. And from that point of view, it's not that great. Investors never pay a high P multiple where there's so much of government interference in pricing and limits in terms of exports and what you can crush to make ethanol or not. So from that point of view, I expect that sugar stocks will at best remain outperform market performers or slightly underperform as well. So generally would like to avoid them, although we're quite positive on sugar per se. And fertilizers, I'm really not sure if there's any news or something, but again, these are government policies which may affect the performance of these companies. And by and large, fertilizers companies haven't really created a lot of wealth over the last 5-10 years or so. Our focus will be more on the financials, and we spoke about large cap IT, that's interesting space. Auto is also looking good. So there are so many other opportunities in the market rather than sugar or fertilizer, where there could be trading rallies from time to time depending upon government announcements.
Okay. All right. We'll keep that in mind. Dipan, thank you very much for joining us this afternoon. Always good listening into you. You have a great rest of the day and the rest of 2024. Good year. Wish you a good one once again. Well, with that, let's move on and welcome our next guest on the show. Anand Shah, head of PMS and AIF investments at ICICI Pru AMC, is joining in. Anand, season's greetings to you. Wish you a very, very happy new year, a very promising, prosperous, healthy and happy 2024. So, you know, we were just going through the note that you had shared with us, and I mean, that's really pretty optimistic commentary coming in. Just for the record, I want to tell our viewers that in that note, Anand points out that India is perhaps already in an upcycle, and a cycle in which we're going to move from B2C to B2B, basically a lot of focus on manufacturing and capex, which could lead to disbelief among market participants. And Anand, I want to start with that because I think this is the biggest challenge with which we're entering 2024, because we've had a 20% rally. Stocks have rallied, especially in mid caps. So one wonders whether, you know, this is getting too much and whether you should lighten and wait for that correction. But is that going to be the wrong approach for this year?
Hi, very good afternoon and a happy 2024 to all of you in CNBC as well as to the viewers. I think it's obvious. It's obvious that too much money is being made in a very short period of time. So investors needs to remain cautious. But I think the good news part of the thing is that this market's been led by earnings. I think over last 3 years, especially 3 to 4 years, contrary to the challenging macroeconomic situations that we are in from time to time, be it high inflation or lockdowns, and more recently, strengthening dollar and rising interest rates. I think the earnings surprises have been consistent and fairly solid. And when I break down the overall earnings growth rate within the index also, we see the manufacturing and manufacturing allied businesses, including within the financials, the corporate banks, the PSU banks have shown a far better surprise on earnings. And this is all because, we've been talking about this for last 2 to 3 years, that for almost a decade and a half, China was exporting deflation to the world, which was a good news for consumer-facing, the B2C businesses, but it was a very challenging period for the manufacturing and manufacturing allied industries. I think that was changing slowly and gradually. We had a change of regime in China, we had a change of regime in India. Both actually led to some bit of revival, slowly and steadily revival in manufacturing and manufacturing allied. Last 3-4 years have been pretty solid. A bulk of the earnings surprises have come in this segment. We believe the balance sheets have improved in these businesses, be it in power generation side, T&D, capital goods, even in metal manufacturing, general manufacturing. The balance sheets have improved, debts have reduced, profitability has improved. So all in all, we believe now the next leap would be the capex. So we have seen a lot of capex coming through from government, but private has been reluctant. Now, since the balance sheets have improved, the bank's balance sheet is also very, very solid with very low levels of NPS. These two combination can lead to a private sector capex leading the growth story in next few years. That is the whole point in that outlook.
Okay. Another theme that you're betting on is increasing urbanization. Your report reads, this is the report for the outlook of 2024. Among the large economies, India still has one of the lowest urbanization levels of around 35%. And this is a number which will increase. Now, what about real estate? Now, real estate has come out of a very long period of sluggishness. Last year, the Realty Index gave a return of 80%, and yet many stocks like DLF are very far away. In fact, most of the real estate stocks are very far away from their all-time high levels. Are we getting into a big real estate upcycle which could last for 5 years at least?
So again, the key challenge in the real estate would be that, and what happened last time in 2007, 2008 was the prices. I think as long as incomes grow and the price of the real estate also grows in line or a little less than that, it's a very good news. Even in India, if you see, many of the pockets where the prices have been stable to flattish, like the city of Ahmedabad or Bangalore, the real estate has actually done well. It's only when the price moves drastically up is when the affordability becomes a challenge, and to that extent, volumes suffer, and eventually the real estate companies in those regions also suffer. So I think the trick would be post-RERA supply. I think the supply should match the demand, and to that extent, prices, if they remain benign, it's a win-win for consumers, it's a win-win for government revenue, as well as it's a win-win for the real estate companies.
You know, there's one contra view on real estate. They're saying that currently the demand is higher than supply because so many projects are getting under redevelopment, so they're unable for use. So, people are flocking to the units which are available. But in the next 2 or 3 years, a lot of the under construction projects in the city of Mumbai and other metro cities, especially the redevelopment projects, will come on board. That supply will be available. And therefore, at that point, there could be an oversupply. Is that a bit of a risk, according to you?
So indeed, as I said, look, Mumbai is a unique region, but outside Mumbai, the land is not a constraint. And to that extent, I think supply, look, demand is not an issue. If you ask me, India needs lots and lots of dwellings. And the only reason why we can't migrate so many people from agri-economy to the manufacturing economy or a services economy is because we are not able to provide their housing in the urban India. I think to that extent, again, I'm repeating, but demand is not so much of an issue as long as the supply remains, supply comes through, and supply comes through keeps the real estate prices under limits within the purchasing power of the common man. I think that's the key for a sustained growth in the real estate industry. But overall, as we've written in that report also, we believe this time we should see stable prices, improved supply, and to that extent a sustained growth in the real estate demand in the country.
Okay, hi Anand, good afternoon, good to see you. And Anand, which pocket of the market would you be a little bit cautious on then? Things are looking up, various themes as you've mentioned. What do you think has already run its course?
No, so we've been sort of underweight consumer staples. A lot of consumer names we've been broadly underweight not because they're not doing well. It's just that either they have a challenge on volumes, or they have challenge on margins, or they have challenge on both of them. But the bigger challenge in that consumer names have been the valuations. That from 2007 till almost 2019, 2020, that was the only game in the town. People literally bought only B2C businesses, and they all got re-rated significantly in that decade. I think that's the area we've been remaining underweight. Separately, we've been underweight IT sector also for last 2 years. Again, 2020 and 2021 were not normal years. The strong growth that we saw in IT sector in 2020 and 2021 was one-off. People extrapolated that and said this is a new sustained growth in the IT sector, and they gave a very high multiples. I think what we have seen in last 12 to 18 months is unwinding of that euphoria, unwinding of that multiple. So I think at some point of time, Indian IT sector will also be good to invest. That's something we have remained underweight in.
Okay, but you're underweight as of now. Got that, Anand. We'll leave today's conversation on that note. Good notes to keep in mind. Thank you very much for joining in, and we look forward to more chats as the year rolls out. That's a view from ICICI Prudential AMC on the AIF and the PMS side with Anand Shah. Let's just quickly come back and take a look at the market, which has managed to put on a little more momentum now. Nifty almost 90 points higher, and it's sustaining above the 21,800 mark. So it's good going for the, not just the large cap, actually for the mid cap side of the market as well, because the mid cap index is clocking gains of a full 1% now. And that's your large cap screen there. Well, as we kickstart the new year, we caught up with a whole host of economists on how the Indian economy could perhaps fare in 2024. Ritu is here with the outcome of that poll. Ritu.
Well, the global economy went through a tricky 2023, took a few punches here and there, but fared okay with expectations of a soft landing in 2024. So in this environment, we asked a bunch of economists how they see the Indian economy shaping up as we step into 2024. And here's what our poll threw up. The majority of respondents are expecting the Indian economy to grow between 6.2 to 6.4% in FY25, around that 6.3% mark that IMF has projected for India, for instance. A third even see the GDP growth rate touching almost 7% in FY25. Government spending is expected to remain the biggest driver of growth in 2024, even as there's been some talk of private capex picking up, namely from the RBI governor recently. Now, the majority believes that the government's fiscal deficit will come down marginally from 5.9% targeted for FY24 to around 5.5% to 5.8% for FY25. The rupee, now that has been resilient in 2023 compared to what we saw in the year before, and going ahead, majority of our respondents expected to trade between 82 and 84 to the dollar in 2024. Inflation is widely expected to average around 4.5% to 5%, still a bit higher than that elusive 4% midpoint that RBI has been targeting. Now, speaking of RBI, the first repo rate cut is expected in the second quarter of FY25 by most and even later by the others. Half the respondents expect the repo rate to touch 6% by the end of 2024. Now, the only place where all of our respondents were absolutely unanimous was the 10-year range. That is seen at 6.75 to 7% by the end of 2024.
Okay, there you go. The big expectations on the banking side and what the Reserve Bank might perhaps offer us this year, 2024. Thank you, Ritu, for that. We'll take a quick break on that note. Come back on the other side. We will tell you all about the chatter in dealing rooms, perhaps a little more quiet today. Nimesh will join in. And of course, then some trading bets for the last half hour.
Well, markets holding around 21,800. It's a good start to 2024. The bulls will take this with both hands. But let's understand in greater detail what's going on in terms of D-Stream chatter. Nimesh joins us to tell us exactly that. Hey, Nimesh, what are you picking up? Most of them are not there?
Most of them are not there, Nigel. Unlike us, we are working. The flows are not there. It's very muted day of trade. But still, flows or no flows, market continues to go up. That's the kind of market we are in right now. So the momentum continues. Big move in the broader markets as well. The index is up 1%. There are a lot of individual winners in the broader markets as well. So looks like more of retail and HN activity quite active in the mid cap and small cap space. I guess the theme seems to be PSUs across the board. A lot of the PSU stocks are doing well. The power PSUs, OMCs as well as the PSU bank stocks all are buzzing, and a lot of institutional interest as well. So that's one space which continues to outperform. I guess there is a bit of sector rotation as well today. So cement has done well. there is a bit of interest as well in terms of buying flows in the cement name. So maybe some bit of anticipation of strong numbers and price hikes as well. But cement as a space has done well after a long time. But the momentum clearly seems to be in the broader markets and with the PSUs.
Clearly, the leadership very much intact with the PSUs. But what about stocks, Nimesh? What have you managed to glean out?
Well, Rima, so the first stock on my list today is ASK Auto. Post-listing has been pretty much quiet, not on the radar at all. Been consolidating in a very narrow range. But interestingly, I understand leading domestic AIF is an active buyer. They have been actually accumulating this stock in the last many days. So that's something to keep on radar. ASK Auto is I'm talking about. The second is, again, part of the PSU basket. So both SAIL and NALCO, both are buzzing into it on large volumes as well. And I understand the HNI interest is quite high in the PSU stocks of late. And especially in these two names, there is a lot of buying interest as well. So that stands out in terms of outperformance. And the last name is Saga Cement. I spoke about cement as a general, been well bid. Saga Cement stands out on large volumes in today's trade. Looks like some bit of HNI interest is back in that stock as well. And the street is anticipating some sort of corporate development as well. So that's keeping Saga Cement exciting in today's trade.
Well, indeed, I hear the same as well, Nimesh. Let's see what comes out with regard to Sagar Cement. But clearly that one is moving higher on great volumes. We have Rahul Mondar, who's back with us to tell us what to buy or sell for reverse trade. Rahul, what do you make of today's trading action? Just before, Rahul, we come across to you, I just want to pull up the intraday chart of the Nifty. The chart should come up for you. Even the Nifty bank should come up for you. We have seen, on low volumes, we have seen a bit of a downtick. A 50-point downtick is what we've seen on the Nifty. Pull up the Nifty bank, you'll see that one, in fact, has slipped as well. So, that was trading in the green. It's done a sharp U-turn out there. So, volumes low, markets moving to around 21,800. But some bit of pullback is what we've seen in the last few minutes. Kotak Mahindra Bank actually is one of the stocks that has taken a bit of a knock. You have HDFC Bank, which is trading in the green. It's moved back into the red. So that's another one that's moved a little bit lower. And even ICICI Bank, so some of these frontline banking names that have a large weight, both on the Nifty and the Nifty Bank, they have come off. Rahul, you were going to give us your picks. Please go ahead.
Absolutely. I think the positivity continues, although I won't write home saying that today's moves are going to be read as a significant breakout given the global market environment is virtually closed. Let's look at individual stock ideas. I think cement continues to be a fairly strong set. So, I was looking at ACC today. Interesting to see some, good volumes that we saw in early December in that breakout. And I think we're again seeing some price action move up on that. So I'd be looking at 2305 as a target one could buy in, keeping in mind that 2220 is good support. So keeping that as a stop loss, one could go long. Titan also seems to be, a good short-term bet. Of course, the stocks ran up a good bit, but, excellent support at 3650, which it's rested on. We went past a level of 3690 also today, which again, I'm reading as a positive. So I clearly see the stock heading to about 3750. So both ACC and Titan are going to be on my buy list.
By the way, this is a very, very sharp cool-off on the market that we've seen. Some pretty strong volatility. Market was cruising along at 21,835. That was near about the highs of the day. And look at the absolute sort of reversal. It's a pole vault on the Nifty. So just quickly pointing out where the fall is coming in from. It's actually across the board. A lot of the IT names, large cap IT, that have been the best performing part of the market, they're seeing gains shave off. Wipro, LTI, Mindtree, HCL Tech, Tech Mahindra, all these stocks are losing ground. Blame HDFC Bank because it was always the drag and now it's falling a little more. And it's pulled the Bank Nifty down along with it. That's a minor profit taking that we're seeing on IT. Reliance was doing better when we had started the show. Now the gain on Reliance has also come down to just about 0.25%. And that's a sharp downtick on HDFC Bank that I was pointing out. Even ICICI Bank for that matter. So in general, there's some volatility that has crept in and the market has given up a fair bit from the top of the day. Okay, but let's stick with a lot of the stocks that are in focus and are in the headlines. Gujarat Gas is one such name, and this is doing the rounds amidst some developments around propane prices. Sonal is here with the details. Sonal, this one's retaining a lot of the gain despite the volatility in the market in the last 10 minutes. What's the buzz?
There are two things which are working for Gujarat Gas. First is that propane prices, they have been hiked. It's a marginal hike, but it is a positive for the company. So propane prices, they've been hiked to $620 per ton versus $610 per ton. But there's been a sharp rise in propane prices in the last 6 months. They touched lows of around $440 per ton in the month of July, and since then it has seen a one-way move. Why is it positive for Gujarat Gas? That's because propane is a competition for Gujarat Gas's products. So if prices for propane go up, that would mean demand for Gujarat Gas would go higher. So that is working well. The second thing, which is a bigger factor, is because the spot LNG prices, they have seen a sharp decline. We've seen crude prices come off, and the delta works for gas prices globally as well. So here, spot LNG prices have cooled off from levels of $17 per MMBTU in the month of November to around $11 per MMBTU now. So that is positive for Gujarat Gas, because majority of their sourcing comes in from imported spot LNG versus something like an MGL or an IGL, which sources domestic gas. So this is a bigger positive for Gujarat Gas, and that's the reason we've seen a sharp uptick on the stock today.
Thank you very much for highlighting that. Hemang Jani is with us on the show. Hemang, thoughts on Gujarat Gas and the rise that we've seen in propane prices from the lows?
Yeah, good afternoon. So I think what we've seen is that the volume growth scenario for Gujarat Gas has improved because of the way the propane prices have really gone up, and more importantly, the issue around the gas pricing, wherein Gujarat Gas was not able to take the price increase while the price that it had to pay for the gas was very high. So there was a lot of pressure. Now that part is to a great extent addressed. So I think surely that's a positive news for Gujarat Gas, and the stock has completely underperformed in the last about 6 to 8 months because of that. So I think it is looking quite attractive to us given the volume growth scenario, the margins, and the fact that it is available at an attractive valuation.
Attractive valuations, do you have the valuations, and how does it compare with long-term averages?
So Rima, currently Gujarat Gas is quoting at about 17 times FY25 earnings. This year, we are looking at a volume growth of almost about 5% when it comes to the gas. And the margins are going to be about 1.8% higher versus last year.
Okay, that's the take on Gujarat Gas. Hemang, your thoughts on some of the frontline auto names? I mean, the numbers, as our colleague Sudarshan was telling us, most companies have missed the mark in terms of the consensus December expectation. Now, the stocks have also had a decent rally, especially the two-wheeler makers like a Bajaj Auto or even some of the others. How would you be positioned on this space, specifically Bajaj Auto, because it really rallied very hard in 2023? What would your advice be?
So the numbers, are pretty much okay. Nothing really major in terms of surprise on either side. My take on auto is that having seen a very strong move in the last 2 years, if you look at FY25, the growth is going to be quite okay, about 3 to 4% in terms of volume across. I'm talking about PVs and the two-wheelers both. So I would not be very gung-ho on the sector, given this kind of lower growth visibility. Also, the sector has done pretty well. So I think it would make sense to be extremely selective, maybe something like Ashok Leyland, or in the auto ancillary space, Motherson is seeing a good amount of traction, and we think that there can be some positive surprises over there. But by and large, auto as a sector, I think would not have a very overweight kind of a position.
Correct. All right, Hemang, I wanted your view on cement, since that's buzzing around quite a few stocks out there. And I wanted your view on Dalmia Bharat. For the time being, I'll just detail a note that came in from Motilal Oswal. They say that, yes, the stock has underperformed in the last 6 months in comparison to both the Nifty as well as the other cement names. But they believe that's going to perform from year on, and that's why it's their top pick for 2024 from the cement pack. First up on valuations, the stock trades at less than 10 times EV per EBITDA. On an EV per ton basis, it trades at around $100 per ton. They see scope for a re-rating, maybe get a higher multiple out there because of two factors. One is their increase in capacity. The second factor is earnings are expected to improve. Three big factors is what they've stated. One is their capacity addition from around this 50-60 million tons, or in the next few years, they're talking about going to around 110 million tons. That would mean that they will grow at around 15%, which they like. That's point number one. Point number two is they're focusing on various initiatives such as higher blended cement, green energy mix as well, which holds them in good stead, and that's what will help their profitability as well. And point number 3 is, yes, they're going to go ahead and increase capacity big time, but they expect the net debt to EBITDA ratio to stay at sub 2 times. Finally, they're seeing on an EBITDA per ton basis, the last year, they did close to 900 rupees per ton. They're expecting that number to move up to around 1,150 because operating leverage will play out. They've taken various initiatives as well. And by 2026, they're expecting it to go to around 1,250 rupees. Explains why Dalmia Bharat, from the larger cement names, well, that's doing a relative outperformance today. Hemang, that's the note. What's your view on the stock? Actually, if you look at it in the last 6 months, the stock has moved 2 or 3% because demand in East wasn't too great. The JP acquisition didn't get closed out. How would you approach it from here?
Well, the good part about Dalmia is that there is an imminent improvement in the earnings given the capacity expansion and a little bit of price stability that we are seeing. And the good part is that they have done this expansion without leveraging the balance sheet, and the scale of operations is actually improving across the regions. So the fact that it has underperformed, the fact that it is available at a steep discount to some of the larger companies with a similar kind of a capacity profile makes it a bit attractive. I think if you want to play for the smaller companies or the regional plays, I believe that something like a Ramco Cement, JK Lakshmi, and to some extent Sagar Cement, which has seen a very strong action today in the market, those are better plays, particularly considering the possibility of M&A that could really happen, let's say, over the next few weeks or months, because there are strong possibilities of that, and that could create some excitement for the smaller companies.
Okay, all right. Our cement record, actually, our coverage on CNBC-TV18 hasn't been too bad. At the start of 2023, we had said Sagar Cement was one of the stocks to watch out for because of a host of factors. The stock was, I think, 200, 210. Valuations have supported them. Then we had the management of Orient Cement. We had visited their plant and we had that, the big interview where they clarified a whole host of factors. Orient Cement as well, if you look at it in the last 1 year, that one as well as close to have doubled. Sagar Cement is up more, I think close to around 35% approximately. Orient Cement has doubled actually from then on. And Sanghi Industries, we had questioned whether or not they'll survive or not. If they survive, it would be great. They survived. The stock price moved up close to around 3 times. Also, some of these mid-cap names, we pretty much helped our viewers understand how things are moving with regard to what could the potential value be if, in fact, things move in the right direction. Well, time to slip into a short break. You come back. Final 10 minutes of trade on the first day of 2024. You stay with us.
Okay, just about 6 minutes to close out the first trading day of 2024. We are in conversation with Hemang Jani. Hemang, so mid-caps, give us some ideas. What's fresh on the radar for this new year?
Surbhi, I think, we are starting off on a good note for sure, but we have to keep in mind that the run-up across the broader market, mid-cap, small-cap, has been very strong. So, not too comfortable in terms of valuations, but since, there is a lot of retail interest and participation, I think cement is one pocket that we've already discussed. And some of the names like maybe JK Lakshmi, Ramco Cement, Sagar Cement, these are the names that one can look at. I think fertilizer and chemical is another space which is buzzing very strongly, partly because of the possibility of, divestment possibility for some of the Gujarat-based companies and the fact that the gas price advantage would be passed on to these companies. So, we think that maybe something like a GSFC, GNFC, those can give 10-15% kind of a move from a purely short-term tactical perspective. And also, I think that some of the pharma names, Taurus Labs in particular, we think that from a quarterly results perspective, some of these pharma companies and OMCs, because if we have seen the prices of the actual price cut has not been significant, so oil marketing companies will report extremely good profit growth. So these are the pockets that one can really look at from a short-term perspective.
Sharp reversal. Look at HDFC Bank and Reliance Industries. These two heavyweights are dragging. HDFC Bank down 1% and Reliance Industries is giving up all its day's gains and now completely flat. Rahul Mohinder is still with us. Rahul, I think in the morning you had spoken about levels of 21,650 on the Nifty as an important level. We're not there yet, but we're closer to that level now, 21,685. How would you approach this correction? Is it a buy? Do you see this expanding into a more meaningful correction and more downside?
I think I'll further extend that. I also said that the two stocks that really would point more clarity, is when a stock like HDFC breaches 1690 and 2570 breaches on Reliance and the Nifty breaching 21,650. So that was my entire, case that I was looking at. At what point do I bring in extreme caution? At what point do I start turning short-term negative? So I think that's what we need to highlight. Again, I'm not taking today's move as a breakout as such, because, even though we saw that new high, we've all, we'll finally come back within range is how I'd like to put it. We're still within that range. So nothing very meaningful to take away from it. I think one needs to wait and watch how the market plays out. But again, keep 21,650 as a caution point. Again, this is not a point where I'm going to step in and take a new long position.
Hemang, very quickly, one of the big losers of 2023 was UPL. Do you see the fortunes turning around for a stock like UPL?
When you look at the space, globally, agrochemical is showing a bit of a turnaround. And the stock has actually not performed at all. It has been a gross underperformer. The company is doing a big fundraise. So I think from a valuation perspective and the sector growth perspective, it is looking quite positive to me.
Okay, all right. Thanks a lot for giving us that view on a couple of stocks out there, gentlemen. Hemang, stay with us though. Let's start winding down markets though for today. It was a bit of a U-turn today. At one point of time, getting into closing bell, we were up close to 50 points. We're going to go home with a cut of close to around 50 points. The problem pocket today was the Nifty Bank. That from being up more than 150 points, well, that goes home with a cut of around 200 points. The auto stocks as well, they were a little bit sketchy today. The brakes were applied out there. Eicher Motors and Bajaj Auto, both of them did end in the red. And Bharti Airtel, another heavier weight on the index, well, that one as well went home with a cut of around 2%. HDFC Bank was down close to around 1%. It's not the quantum of the fall, it's the way it did a U-turn in today. In terms of stocks that did well, some of these FMCG names, Nestle was up close to 3% in trade today. Coal India continues to find favor, so that was up 1.5%. And ITC held one end up close to around 1%.
So the mid-cap index closes with a gain of 0.5%, off from the session highs, but still closing smartly. The advanced decline ratio in favor of the gaining side. 2 stocks gaining for 1 in the red. Gujarat state-owned companies did well, whether it's Gujarat Gas, GSFC. You also had fertilizer names rallying and rallying hard. Nagarjuna Fertilizer up 10%. RCF, seeing buying. DCB Bank stands out on the price and on the volume charts too.
Well, really the reversal was quite something to look at, because final tally takes the Nifty down 45 points, and at one point in time we were cruising above 21,800. So very, very swift and sudden reversal, I guess, telling us that that's the kind of market we are in, given the very heady rally we've had in November as well as December. I'm just going to talk about some of the movers and shakers. L&T Finance, for instance, was one such stock closing on the downside. Lemon Tree lost some ground as well. Manappuram Finance, these are some of the stocks. JK Tyre, some stocks where we've seen a negative close on reasonably large volumes today. But then you have, of course, the gainers as well. Railtel, PFC, GAIL, REC, Hoodco. Some of the PSU boys managed to retain, if not all, but some of the gain. The final tally as we're closing out, the bell goes 46 down on the Nifty and a whole 0.5% down on the Bank Nifty, and that continues to be a bit of a sore spot for the market. First day of the new year, Bank Nifty has, you can say, been a little disappointing with that sort of a fall. Well, in any case, that's curtains on the 1st of January 2024. Do stay with us, because we will take all the action forward and tell you all the important cues you need to track. Up next after the break is Markets Forward.
For more news and updates, all you need to do is follow CNBC TV18 on all of our digital platforms.